All right, y'all. Sunday, September 7th. Welcome into our Sunday Legacy Study Group. I'm your host, Gerardo G. Money Pius, and as always, right, great to have everybody here. Um, and yeah, gold speculation went up. As always, right, these calls are just for educational purposes only, and any suggestion or speculation, it is just that speculation on my end. Yeah, this gold was bullish. Gold was bullish all week long. There was this target of 3,600 that I wanted to be met, and it actually hit to the wick. And we'll review this analysis. We'll review a little bit of the SMT, the structural momentum timing. I have some nice notes that I want to share with you guys. I just go through them one more time here, and then as I wrap up certain sections. But yeah, hopefully everybody had a successful trading week, and you were able to get some of this gold, right? Get some of this gold to the top side. Um, yeah. So let's see here. Checklist everything's ready to go. Yeah, but if everybody's ready to go, let's go ahead and get started. Um, how did you guys do this week with gold or in trading in general? Were you guys able to profit from it? Didn't enter, didn't participate, took some lessons. Let me know. Let me know. Got some pips on Nico. Awesome. Got some pips out of the market. Anybody else? A crazy ride, she said. Yep. All right. Well, what's up, Andres? Welcome in, man. Damn, didn't get to participate as much. Yeah, that happens too. That happens too. Just sometimes when we're too busy, you want to pull the trigger, but just sometimes it's best not to, and just let the market go. But here it is, guys. This was a speculation that we did last Sunday. You know, we did what we always do, right? We identify the previous weekly candle, mark it up high and low, put a fib on it, slap a fib on it. Dr. Latrice, welcome in. Great morning, great morning. KG, welcome in. Um, just getting started here. Previous weekly candle, high and low, and I wanted a pullback, right? I wanted a pullback to at least the 12-hour rally base rally. It did not. It just took off. Okay. However, on this time frame, right, it did pull back to this 12-hour candle, correct? So if we were to do the same approach where take this individual candlestick, mark it low to high, right? I'm curious now. And if I fib that candlestick alone or independently, what did it do? And there you have it. That 12-hour candlestick, right? Low to high fibbed. When the next candle opened, it wicked into at least the 23%, just missed the 38, and then took off, right? Never came back. So that could have been the setup, to take if we were on this 8-hour time frame. On the 8-hour, let's see how it looked. On the 8-hour, when the market opened, same thing, right? The last candlestick here got a wick into it and took off. After the rally-based rally, right? We notice we have 3 consecutive strong pushes, some pausing, and then takes off again. Okay. So again, though we always say, right? Markets, and I used to always say, the market is fractal, right? It repeats itself over and over and over again. And it's just a matter of what scale you're in. If the market is fractal, our approach, in my opinion, has to be exactly the same from top to bottom, from whatever time frame it is. And we do, right? We do have that same approach. If we're going to enter a trade, sometimes we measure just one candlestick. We are trying to find some zones where price will find some rejection. Um, but again, the way we kind of enter the trade almost every time is, based on, measured low to high, pivot, and, it's always going to come down to that one of the fib levels, right? One of the fib levels. But that's how this week played out. Very, very strong. Very, very strong. And I noticed, right, we always take it to the negative 18% at least, and the thing surpassed it. It did reach this negative 18%, right? And that is what we've been monitoring this entire time, right? It's been this April candlestick. This was the last bullish close that kind of trended past March. 3 months of consolidation, finally some buyer strength, and it reached the negative 18 target. All right, y'all. I think we also reviewed this on a quarterly scale. And remember the pattern we just talked about? We had a rally-based rally, remember? And then what happened after that? 3 consecutive bullish pushes. There's going to be a pause, and then another huge push up. I don't keep up with the fundamentals too much. Is there a speculation out there that has a projection to a certain price level, guys? Is there a number? I think somebody said 4,500, or what was it, Nico? I know the futures, the document that you shared, um, had it at 3,600. We already tapped into that, but what was a higher number? If you don't mind just sharing it, if there is a higher number. 4K, 4K. Okay, 4K. And that's still pretty high. That's still pretty high. But yeah, this is where we're at now. So this quarter, right? This quarter is about to close in 23 days. So this is the last day. Um this is the last day. And good observation there. Let's take a little step back here. I remember when one of the classes that I used to that I looked at back in the day. Um, let's do this. Just hide drawings. Let's turn on the higher time frame candles one more time. We'll go ahead and show higher big time frames, months. And this was one analysis that one of the guys that I used to follow, he did, and it was very interesting. All right, so these are things on the yearly scale. Let's see. Yeah, it goes back all the way to 2006. But let's go this route. Perfect. All right. This is the best route to do it. It's fine. Usually, Dr. Patrice, it's a pause or a pullback. Pause or a pullback. Yeah, whenever we see those three strong pushes, is a pause and a pullback. But again, it all depends on what scale, right? Last time we were reviewing that, hey, look at this, and you called it an army, right? An army of bullish candlesticks, and it never slowed down after three strong pushes. Well, it's because it was pushing up on the weekly candlestick scale, right? So after this week that just closed, we may get that pause, which that's what we'll review today. But at the same time, it's happening on the let's see, here's the thing, right? On the quarterly, we got the three bullish. We're gonna get the three bullish closes after the 23rd, after this one close, the month closes. It'll close the month, it'll close the quarter, and so forth. But on the monthly scale, right, we just got two, so you could potentially get a third one. How big was this push up? Let's see, that's about 158 pips. This one's roughly the same, 158. So maybe the next one will be the same, around 158. Let's say it comes into about halfway. And then we go to 158. There you go, 36.7-ish. 36.7-ish could be it. But let me quickly go back to this time frame. Let me see if I can do a good job in explaining that. Yeah, so like Nico mentioned, all the way to January. Yeah, usually in February, right? March, February, here in the United States, we have well, for the remainder of the year, all the retail shopping, retail sales are in place, right? Uh, Christmas and then New Year begins, and then also Valentine's Day. So the value of metals goes up because of those things, right? And usually after March, that's kind of where gold kind of pauses a little bit. So let's see. Let's kind of put that to the test. So this is a year, and each candlestick represents a month. So let's see here. So in February, nah, that's probably too far back. Let's go to 2020. 2021 and forward. Let's just see. We can go ahead and erase that. Here is the month of, let's just go ahead and do March. March, March, that's February, and that's March. All right, so each arrow is pointing to March. So in 2021, and March price, this didn't do anything here. Let's just put it like that. It didn't do anything that year. It's consolidated here, right? March came. It's February, excuse me. There's March. After March, there's a nice little decline of value, right? So if we look at the quarter, right? So towards the end of the quarter, price rose, right? Price rose. To the end of this quarter, also price rose, right? And here as well. So this was a huge month here. So after February, everything just skyrocketed. So I think we're gonna be bullish, guys. I think we're gonna get a very, very minor pullback. I don't see us going too much down. I think we're gonna continue going up. Um, I'm not getting the visual that I want that to show you this example here, but this is a very good example how we can read, the things on this scale, right? Things on this scale. But moving forward, let's go ahead and I've been taking some notes. I was telling you guys, trying to put things together, some notes for everybody so we can follow things on the SMT. Pretty good here. Let me see if I can find my document. I lost it now. Who got it here? Daniela, welcome in, Daniela. Good to have you here. Just about to send you a message. Making sure you're okay, first of all. I do want to go over these notes here with you guys because I think just to kind of, we're the only ones here that have the SMT system. And I just wanted you guys to ask any questions about it as I'm taking my notes. All right. Perfect. I'll read it out here. If you can't see it, I'll do the best I can to read it. But we're gonna go ahead and turn on this indicator. Alrighty, so this is one of the, I guess, the chapters, right, that I'm working on to explain things. And the goal of this chapter here is to learn how to read a one box, right, before putting everything together. However, I do have a one box. What's that? What's that? Let's say the code messed up. I just fixed it. Oh well. We'll just have to go a little old school then, I guess. I'm gonna add the other indicator, the original one, since that one can be turned off. Probably, excuse me. Hopefully you guys can see that right there, the colors and stuff. All right, that's fine. All right, so here it is. Um, the learn to learn how to read one box before you try and trade it. Obviously, we need to understand what a box is, what components live inside, and how each box. And I finally actually put some names to it: span 17, span 52, and then the Kumo frame. Keeping some traditional names to it, and so forth, right? So the SMT components, each box, okay, each box is a rolling, lesson one, right? What is a box? Each SMT box is a rolling window, a defined range of recent candles. It updates with each new bar, keeping your focus on the most relevant market data. So that's the whole purpose of the boxes, guys, is only using the 5 minute and the 1 hour time frame. It prevents us from looking left too much, drawing trend lines outside those boxes and so forth. Okay. Inside every box lives a full trading system. And when we're talking about every box, we mean the 17, the 52, and the 204. Each one, remember, has everything. Each one has structure, is price impulsing upward or downward. Each one has momentum, is price above or below the midpoint, and each one has timing. Okay, how close are we to the midpoint shifting due to candles rolling off? Think of each box like a living market engine. It breathes, adjusts, and reveals structure and pressure in real time. Okay. So that's basically each box is independent, right? Lesson two, components. Okay, so structure. Structure the direction of price within the current box range. So if I were to, let's just say, just keep the 204 box, right? This one's not color coded, but the structure is looking for the low and the high. Because of that, this is a bullish box, right? That's a bullish box. So same thing with the 52, right? The 52 has its own structure. Okay. And technically, the 52 box also, right? It has its own high and then its own low, and the structure of the impulse is to the downside. And then simultaneously, the 17 will have its own as well, right? So see, the 17 has the impulse down, did a pullback here, and then so the 17 box by itself, it's on a downwards trajectory. So that's how it works, right? Bullish moves, price moves from the box low to high. Bearish price moves from the box high to low. Structure changes if new highs and lows created roll off. And that's really, really important, right? That's kind of like one of the main things of the box system. Next thing up is momentum. Okay? Momentum, defined by the relationship between the price and the midpoint. So when price is above the midpoint, is considered a bullish momentum. When price is below the midpoint, is considered a bearish momentum. Can also be analyzed as the mom and dad logic, that we'll go over later. Timing. Timing, every box is rolling. So every box is opening new candlesticks, right? So the midpoint constantly adjusted, recalculate, excuse me. Timing equals how close we are to shift in midpoint. So let's kind of see what that means. All right. Let me just go ahead and put the other one in. I'm used to seeing this one anyways. Erase some indicators for now. And hide some stuff. All right, perfect. So again, right, the timing factor, because this has bullish structure, right? The low is latched onto this the lowest candle. As time moves forward, right, it will roll off. And this is kind of how you can tell if something is going to remain bullish or bearish, right? So here, right, let me put forward a little bit. This is where momentum is stronger, but the structure is bearish. The moment we made a little high above this, you see how the structure, assuming the timing went to the bottom side, the box turned blue and then this turn went there. Let's put that one more time in replay. All right. So this is inside of the frame. The highest candle is there, and then the lowest candle is there. Therefore, giving us this push down. Okay. In that angle. In that angle. The only way this will change is we get a little high above it. Or price comes over here. Well, this if price comes down first, this will not change unless it rolls off. Okay. So as we continue, okay, see this high, and the way I have the indicator coded, this is always looking for the structure first, and then find it latches onto the highest high or the lowest low supporting that structure. So here, right, it still has about 47 minutes left of candles, 47 candles left, excuse me. And there it is, right? The moment we go higher, right there. Now this is the highest high, and this is the lowest low inside of the frame. And they were just to kind of connect the dots. Which direction is it flowing? Well, it's flowing upwards, and therefore that's the reason why the structure now is bullish. Okay. So here, right, this low has 48 bars to go. Keep it moving, keep it moving. There we are. Okay. So here, right, the structure, excuse me, the midpoint, how close we are to shift in midpoint. When major highs, low or lows roll off, structure and momentum may shift too. Okay. So we know for sure that the midpoint is going to change, but how is it going to affect the structure? So if we were to kind of copy this box like that, this is the same box. After these candlesticks roll off, it's going to find the lowest candle, and it'll be this area here, correct? For the longer period of time. So in the future, this will actually push up. And then you ask yourself, how is the structure inside of that future? It's still bullish. See, boom, boom, boom. So the midpoint will shift, but the structure will remain bullish. Give it some time there. There it is. Finally latched onto there. And this also too, Pablo, I know you like to use, and even Dan, you like to use the 23 percentiles. You can all, this is a 50% fib, but if I grab this little box here, where's my God box? I thought I did something cool with this. Hold on. Guess I didn't. Yeah. I had it set up where it was reading me the 23%. But if I just do it like this, okay, this will allow you to read into the future. Okay, what level are we going to be in? So if I rewind a little bit more, okay, this is going to be the future lows. Okay, I'm going to take my fib from there to there, and we're actually going to be touching the 78% line will be right here in the future once these candlesticks rolls, and we know that's a good area to buy or find support. And there it is, give or take. And then from there, price takes off. Okay, price takes off. That's what the timing is. When major, and again, each box has its own timing feature. Okay, so here, right, this is when the news came out at 7:30, the NFP news. Okay, this is what see. This no son 78%, son 23%. Los dos lados, ¿verdad? All right, so let's kind of mark it up. Let's kind of put this to the test a little bit, right? Timing isn't just about when the midpoint will shift. It's about whether the shift will redefine the structure. All right, so let's kind of see if we can see into the future of this. All right, so when this low rolls off, right, the box will shift up, correct? Let's put a 1 there for yes, if you can, if you're able. 2 for no, or 0 for no, right? So the question is, when this one rolls off, this low rolls off, the box will shift up. 1, yes, that means we'll push up. So the pressure is pumping up. What about the span 52 box? What about when this area rolls off? Are we going to pump up? Yes, right? What about when the 17? See the 17? When all these little candlesticks roll off, another 1, right? So everything is projected. The averages, all of these averages here, these 3 averages, they're all projected to pump up. So basically the pressure is to the top side. The pressure is bullish. The midpoint or the equilibrium, which we'll go later, is bullish. And as time rolls off, the box adjusts, and boom. See how, and this is where my friend Kevin, this is basically his game right here. Okay, Mr. Time Box Kevin. Notice that almost exactly when we get to this candlestick, we get that pump up. So we're at the edge, and you see, just as these are about to expire, we get that push up. And there it goes. And there it goes. Okay. Now again, right, the market is always seeking equilibrium. I think during our live trading session, we got this trade, give or take around the 52 midline right there, the span 52. That's how that works, guys. That's how the timing stuff works. Okay, that's how the timing stuff works. All right, lesson three here. Let's see. Understanding the boxes, span 17, span 52, and then the Kumo frame. Each SMT box has a specific purpose, length, and role. Each box in the SMT system has a unique purpose, time frame, and role reading, in reading the market. Once you understand the logic of these boxes and how they interact, you'll begin to see the entire system with clarity. I do too, Doctor. I was debating on those names. I was debating those names, and I gotta stick as close as possible to the Ichimoku, and then I was calling it at some point this one span A, just call it span 17 because it is span 17. It is technically span A, but with the settings in the Kumo frame. All right, span 17, right? The time box, the little one. The calculation, you get the highest high and the lowest low divided by 2 over the last 17 candlesticks. So that's how you get that box. Also called the time box. This was the original building block of the SMT system. This is what when we were first back testing this a few years back, this was the only box we had. Okay. The purpose of it tracks short-term momentum, short-term balance and momentum, provides the first signal of a market shift, is most sensitive to price changes, helps spot aggressive movement away from equilibrium. It also acts as the trigger in the mom logic versus the span 52. Okay. So it's ideal for timing entries, often leads the move before span 52 or the frame confirms, which that's very true. When span 17 is above span 52, we'll have bullish momentum or a bullish box. So let's we were right here when momentum was bearish. There it is. Okay. So when span 17 is less, or the midpoint of span 17, right, is below span 52, is a bearish momentum. So see here how we're bearish because the midpoint of span 17 is below the midpoint. We got the bearish momentum. Okay. So as we add some more candlesticks, just keep an eye on those two midpoints. This red one and this green one, which is the cloud, technically. Okay, still bearish momentum. But here's a good observation, guys. Okay, check this out. Would you guys say here? I mean, the momentum is bearish, correct? Okay, the momentum is bearish. But what does it say right here? What does the 17 say? Provides the first signal of a market shift. How can we tell that there's going to be a market shift in this chart? Anybody? You can unmute yourself. You can type it in however you want.
And the midpoint of the 17 will move up because the box is starting to go into a bullish structure.
Exactly. Exactly. Daniela, okay, there you go. Now more power to that. Daniela sees it sees inside here, it's forming a reversal head and shoulders, right? That's por. But yeah, so look at the future of the 17 box. The future of the 17 is in an incline. And what do we say at the very beginning over here? Momentum. Price above the midpoint is bullish momentum, right? So if we just focus on the small box by itself, the prices are above the midpoint. So technically slightly bullish, right? So price either comes back to equilibrium or equilibrium pushes price up. Let's see what happens here. We're at the edge of that box. Prices are still above the midpoint of the 17. The midpoint goes up. And then more candles roll in, more roll off. And now we have bullish momentum shifted completely. Okay. So there we were speculating the future of 17 was bullish. And that's how everything went back and turned. Okay. And that's how that was the example right here. Alrighty. Again, right, this is just all the fine details, right, of how everything works, right? This is not just any system, any indicator. It's very powerful stuff, you know. As I'm researching the Ichimoku cloud these past few days, and Goichi Hosada, right? The creator of this indicator. I mean, he really he put some work in there, y'all. He put some work in there. He put in 30 years of back testing and trying to get this indicator right. Before he actually shared it with the public, right? And so he's got a lot of concepts in there that are very, very important. And one of the things that I do like to share is this. Let me see, just to kind of add some of the theme to this. is, we're creating an indicator that has been back tested by hand for 30 years before it went public, and it's been around ever since. Okay. So the numbers we get here. So this is Mr. Goichi Hosada, right? So 5 concepts of the cloud by its original creator, right? Uh and when no, yeah, everything by hand, Pablo. I think he was a newspaper editor or something like that, or he worked at one. So he got all the interns there, according to the story. Over 20 interns just crunching numbers for him. Crunching numbers for him, all by hand, all by hand. But this is really important here, guys. Know the presence of the market, who's in control, right? The box allows us to see that. Time is everything about the market. So time theory, timing is important. The box system has timing. Be free and surrender. Momentum. How many times have you seen momentum take over? And no matter how good the technical analysis may look, the momentum will do whatever it needs to do. Simplicity is the truth. Obviously, that's something that we've been saying, Marcus and I, with the ETM candles. Try to keep it as simple as possible. But here's the most important thing about this thing here, right? Is to be successful in trading. Always trade like you're having no positions, right? This is kind of like translated. So no positions mean you're not trading. You're only watching the market. When you're not trading, you can judge things objectively and correctly. However, as soon as you have a position, right, your emotions like greed and fear play into your decision making. So even if the market makes a move just a little, you can get scared or feel good from moment to moment. But no matter how many positions you have or how big the position is to you, if you can look at the charts as if you have no positions in there, then you can analyze the charts objectively and be able to deal with the changing situations with a correct mindset. Okay. So that's the thing, guys. When we trade, we really, it takes time, experience. You have to trade like there's no trade in there. We've analyzed we analyze the market better when there's no trades. But when we put a trade in there, it's like somebody just pokes our nerves or something and just flares them, right? But yeah, so it takes time, right? It takes time. It takes time to get to that point. KG says that's the truth, right? And again, one can say is like, okay, it's because you're over leveraged, right? But that is kind of one of the things as well. But I think for the most part, right, like sometimes we're in a hurry to make money or to make a quota. And I think that's kind of the main thing. Like, oh, and after some time, after you're winning so much, and then you lose it all, and then you win and you break even and you take profit, you're like, that's it. That's it. Let's see. There you go. Goichi Hosada, thank you. A Japanese journalist first introduced the idea of Ichimoku in the 1930s. After 39 years of research, there it is. In 1969, he finally published his idea. So there it is, y'all. So again, everything that I'm doing here with these box system, right, it's coming from that 39 years of research. It's coming in from his calculations, right? So these are calculations are not just any calculation. Nice. I think yeah, so that was span 17, span 52, calculation, high is high and low is low, divided by 2 over the last 52 candlesticks, also called the momentum box, provides a medium-term bias and momentum filter. So I think I repeated that twice there. I sure did. Okay, so it smooths out short-term noise, validates or rejects the signals of span 17, serves as a bridge between the fast 17 and structure, and communicates with frame for the data logic, which you guys will see here in a second. So here's the thing, right? The span 52, when it's above the frame, the midpoint of the frame, we're going to have a bullish directional bias. So it's the green line, guys, the green line. Okay. And when it's below the mid 52, the mid 204, let's see if I can find an example. This is a good example here. Okay. So bullish structure, bearish momentum. Mom wants to go to the mall. But dad, 52, is still thinking, not right now. Okay. But again, mom still controls this horse, right? Okay. Or maybe we can say, we left the house, mom forgot something, we went to get it back. Whatever, right? Anyways, this 52 mid is bullish. Why? Because
204.
there you go. Span 52 is greater, or the mid is than the frame. That's why it's a bullish momentum. And our color is green. When that's below, it'll be red. Right? So regardless of what dad says, we still have to wait for mom. Up, see, there you go. See? It turned red. So that did come a little bit below the midpoint there. But this is where I say, right? Mom controls the movement. What do they say? The fathers are the head of the family, but the mom is the neck. She controls everything. And there it is. And yeah, that's what it is. This is the one that I like for entry. Okay. The 52 mid is the one that I like for entry. Okay, the most. So here it is, right? This is where we were live trading. Oh, a live call on Friday. 9:30 came. This is almost a perfect setup here, guys. This right here is a perfect setup. Let me share this with you guys. Pablo, este es el setup perfecto casi. Right there. Why is it the perfect setup? Okay, let's check it out. Structure bullish, momentum bullish. Timing is about to expire. The midpoint will shift, but it's only going to stay there. So everything will still be bullish. Okay, so how do we enter this specifically? Well, this specifically, you wait for price to come back to the midpoint. Let's actually rewind about right there. Okay. You wait for price to come back to the 52 mid. Your stop loss goes at the low of that one. And then you take it to at least a 1-to-1 or 1-to-2, whatever it may be. Oh, we were so close to there. Okay. That's the technical setup. You can always adjust your stop loss, of course, right? Y sí, esto sería, Pablo, en solamente usando las cajas. Ya después de ahí pueden uno encontrar un poquito más confirmación. Okay. Yeah, but this is the perfect setup right here. Midpoint, stop loss there, take profit back at the high, or whatever it is. You can also reduce your stop loss at some point, but visually that's it. Price comes back towards the midpoint. And there it is. Now, granted, that's 3,600 level. But that's what we're looking for every single time, guys. Every single time. All righty. All right, Kumo frame. Midpoint. The high is high and the low is low, divided by 2 over the last 204 candles. Also called the frame, defines your current structural range. Anchors the SMT system. So back to what we said earlier, right? The 17 was the one that started everything. Then we added the 52 for support. And sometimes this was giving us pullbacks and things reverse. So we needed to add a bigger frame. Okay. And that's where we added it. So defines trend structure inside of the active range. Midpoint equals long-term equilibrium. removes noise by ignoring older price outside the box, right? So we don't care too much about anything to the left too much, guys. Okay, we just care about what's happening now. And let's see this can give us a good example here. Back just a little bit more. Very nice. Okay. So in this scenario, right, this impulse is valid, right? Because the 204 candlesticks are still latched to it, right? Like this. So here it's important to still look left, correct? However, as time goes on, there you go. That high is no longer valid, guys. We're still bearish. No, still bearish, still bearish. But then once we get to a certain point, like right there, this high up here is no longer valid. We don't need to look left anymore up here. Okay, this is gone now. We only care about what's in the frame and the projection, and there it is. Now we're bullish. Now for sure, looking left here we should not even care about looking left right here, because the frame, the momentum inside the frame is pointing in what direction? Upwards. Impulse, correction, boom. There you go, Latrice. The 204 box is also about to expire. So sometimes we get caught too much looking left. Yes, looking left is important, but only relative price action. Yeah. So you fib this high to low. Like there, guys, right? Discounted sales, right? We call that the institutional prices. What does momentum say? Momentum remain bullish. It turned a little bit bearish there, no problem. Bullish again. But we only care about what's in this frame. There it is. Exacto, Pablo. Pero sí me gusta los días. Los días. Sí, sí, es muy importante considerar eso, pero sí. El sistema se puede usar solo. Pablo was asking, like, you really don't have to use a lot of time frames. Like, yeah, you don't. You really don't. But, we do got to keep things in bigger scale just to be safe, because, those previous daily candles, weekly, daily, are important. Are important. So here again, right? Only structure inside the 204 range matters. Great for identifying trend buys, breakout setups, and trailing structure. All right, so lesson 4, reading one box, mastering the SMT logic. Will go pretty fast here, okay? So whether it's span 17, 52, or 204, each box is its own complete SMT system. Inside each one, you always find structure, momentum, and timing. Master one box first, then combine them for a deeper SMT strategy. I'll be kind of taking snapshot of the strategies later for us, but just quick notes here. So span 17 and 52 work together to form the mom. Span 52 in the Kumo frame, the dad, the directional strength. Here's an important note, right? The 17 candles on the 1 hour time frame equals 204 candles. On the 5 minute, excuse me, on the 5 minute time, what was it again, Nico? I always forget here. Okay. There's the big box has 204 candles. All of them are multiplied times 5 minutes, because we're in the 5 minute time frame, which that gives us a total of 17 hours. So when we go to the 1 hour chart, the small box is exactly the same as the big box. Okay. So if we were on the 1 hour time frame, Obviously, we have 3 new boxes with the same rules, 17, 52, 204, but different scale, right? This here represents 17 hours. This one represents 52 hours. And this one represents 204 hours. We're on the 5-minute chart, right? It did not represent 17 hours. It only represented 17 candles times 5 minutes, whatever time that is. I think it's 120 minutes or something like that. Okay. But simultaneously, this small box on the 1 hour scale is the same as the big box on the 5-minute scale. So on the 1 hour chart, we can literally keep an eye on the entire 5-minute SMT system just from right here. So if we were trading on the 1 hour chart, what structure do you guys see on the small box? Impulse. There goes his midpoint. Let it come into the midpoint, and then we take it to the top side. So technically, right, there goes the low and the high of there, right? And if we were in the 5-minute time frame, it's the same fib. Same fib. Right there. Go back to the hour time frame, right? We know the midpoint is a 50%. There it is. That's our entry zone. Okay. That's our take profit zone up here. And let's go back to the 5-minute. Same thing, guys. Same thing. This big box on the 5-minute is the same box on the same small box from the 1 hour chart. So there you have it. So more notes to come on this. As I mentioned to you guys, I'm kind of putting together this document in a school thing just for my records, but again, they'll be available in some format. And just finalizing a few things that I want to put together, but I think it's coming out nicely. And just to give us some reading content, right? Some reading content, and then we'll add some short videos to it for those explanations. But there's no questions there. Oh yeah, yes, some images for sure. Some images will be there. Will be there. Just to kind of show some examples. I think I broke it down in this format where I have the overview, the components, dive into more equilibrium at a glance, because equilibrium is very important, right? I do dive into some contents there, the functions, how to really use the system, and then last but not least, right, just some strategies that we can put together. So that is yeah. All right, let's go ahead and continue our top down analysis, guys. We'll wrap it up here in the last 15 minutes. The power of the cloud. That's right. This is the cloud, y'all. This is the cloud. Gracias, Pablo. Esto va a ser un curso, básicamente un curso escrito con imágenes y también con un poco de video. Yeah, like I have it over here, right? Just to kind of quick glance at this. And I'm still kind of working to, but again, this is going to have a prereqs, understanding candlesticks, market structure. They're just basically the simple things, right? And it'll be something like this, Aniko. This understanding candlesticks, just some written material, My video will go here, and there goes the images that you're talking about, just to kind of show some examples of price. Basically, I'm just getting the most important thing to give as a foundation, and then use it, right? And obviously the ETM candles are there. So that's kind of the format that I'm going with, um, to simplify things. All right, let's go ahead and get started with the top-down analysis here. Hit the replay. All right, I did it last time, it didn't work. I'm gonna see if it works today. Let me do this, record a video idea. And we're gonna take screen, this one here. 3, 2, 1. All right, perfect. Welcome in, guys, to the weekly outlook, Sunday, September 7th, 8:16 a.m. Central Time. I'm your host, Gerardo G. Money Paz, trader educator here based on Dallas, Texas, and this is the analysis that we have for gold. Last week's analysis was definitely on point. This is a speculation. Gold to 3,600. There it is. You can go to the profile and check out the video recording on this. Today we'll do a top-down analysis on gold to see where it goes today. And we'll simply just continue off from the previous weekly candlestick. We had 3 strong bullish pushes up. A lot of times when this happens, we get a pause or a pullback. Also, too, right? This recording is live right now with the class that we do, our Sunday study group. So if I seem like I'm talking to somebody else, I am. All right, guys. Yeah. So we do have 3 bullish pushes. I'm expecting a pause, but let's just kind of keep to the core mechanics, right, of our top-down analysis. We go for the weekly chart, and we simply just measure the high and the low. We locate the high and the low of the previous weekly candle. The open is also very, very important. We'll go ahead and take it right there. Previous weekly open, as so. All right. Here we immediately go down to the 4-hour chart. So we draw those 3 lines, 4-hour chart. And then here we study inside of from the edge of these lines to the right. What structure do we see? What impulse do we see? What support and resistance do we see in there? Okay. But before we do that, we do draw a fib from low to high. Previous weekly right there. Perfect. Okay. And again, right, these levels, these 23% levels are very important. Even right here, guys, I'm already fighting a setup right here potentially. There's a little BC there, come in, fill in this imbalance. Maybe we can take off. 23% will be the entry. Maybe stop loss one below here. But again, right, this thing is bullish, guys. This thing is very, very bullish. We have a bullish trend line there. We have some support and resistance, give or take right there. So anywhere inside of this area, I can see us continuing going to the top side. All right. I'm only going to keep the support and resistance there, so I do like it. But let's go. And again, we may have some additional support and resistance right here. You see all these little candlesticks? That could be another area of support and resistance. Okay. We'll come back to that. So we got on the 4-hour time frame. We're still bullish. We did get a small pullback here. We may get another one. Here goes the fib levels. Now let's go back to the daily chart. Okay, let's see if we can find some ETM candlesticks. So here, right off the bat, we have a rally-based rally. Right there. Okay, so price needs to beat that rally-based rally first before we can actually think it'll go lower. I like the open of it. Maybe get the open, maybe get the low of it, and then continue upwards. So let's kind of do something like this. 12-hour chart, how does it look? You know, I think we can get there. 8 hour. All right. More price action. We have a nice 8 hour rally base rally down here. Let's go ahead and mark that one up. Very still around the clock. Perfect. Maybe the slope. And another observation here that I think we mentioned one time, right? So check out this rally base rally there, right? We normally mark up the base, but it's actually the bullish candlesticks that we do need to keep an eye on, right? Because this wick right here came in exactly to about 50% of that first rally. Okay. And then from there it turned around. Which I think we had the Pablo. You had to buy there, remember, Pablo? We had to buy right there. But he was. Came into this 4 hour. Yeah, so here goes that 4 hour BC. It's also a daily rally based rally. So I do like it, guys. I do like it. Here, maybe around, I think it comes starting around 35.50. That even number kind of goes down a little bit and then pumps up. That's kind of my area that I would like to see. Let's see where 38, where's the 50 at? Yeah, in between 38% and 20%. I like it. I think it's gonna be have a hard time pushing up to the extension, but at least back to the highs. Just kind of just poke the highs, poke the highs, poke the highs. That's kind of what I see. Okay. 1 hour time frame. We have nice structure to the top side. Let me quickly turn on the SMT indicator. Oh, you know what? I just messed up. um, Dang it. It's okay. So the the trading view, because I'm recording this to kind of kill two birds with one stone, so I don't have to do it again. But trading view, right? Because the indicator that we use is private, it reads it, and if we have a private indicator on like public video, it won't let you share it. Thank you. Oh well, we'll see what they say. Hopefully, it's like 10 seconds. But yeah, so still nice bullet structure, guys. Still a nice bullet structure. I do like it to the top side, and you know, we just got to read to see what momentum has there. But long story short, I am more in favor of the buys. Let me mark up these structure points to continue. Got a nice high there, nice higher low, very nice structure. Okay, if price really wants to kind of just do a proper pullback and then turn around, that's the area. If it wants to grab the low of that one, we will find a way to there. But other than that, I think we're bullish. I think we're bullish. Would I wait for a pullback instead of stop order? Like a stop order back to the top, Dr. Juice. Is that kind of what you're suggesting? Or is yeah, that you know what? That could be it. Where let it drop below 23%, put a stop order at 23 and just let it ride. I mean, that's fair. I mean, that is a one way to tackle this. We mentioned that on the monthly scale, right? These two bullish candlesticks here, we could be going for the third consecutive third one, right? So that can be a nice run up. Also on the quarterly scale, right? We still have some time, 27 days before this quarter ends, and then maybe that's where we get our pause. But other than that, yeah. Let me see there, Dan. Here, Dan, low to high right there.
Yeah, that's one. Mhm.
Perfect. Go ahead and measure that. And put the fib on here. And 38, 50% area. So it's not bad. Not bad at all. So we do like that, at least to these extensions on that scale. But okay, this concludes the weekly outlook and study session that we have, guys. Any sells or counter, just be careful. Any buys, hold if you're able, because this thing could go to 4,000 as they're saying. All right, let's see if that 2-1. All right, perfect. Hopefully I can publish it. We'll see. We'll come back to it. But anyways, yeah, guys. Well, that concludes the session today. Actually, we finished a few minutes early, almost right on time. Thank you guys for being here. Any questions, right? We have the Discord available. Also, the chat, the WhatsApp group still exists there. Quicker communication. But we'll keep an eye on gold this week. Any of the pairs, we'll continue speculating them over the week. And we enjoy your Sunday. Enjoy your Sunday. I know for myself, soccer coaching season has begun for the fall. So as far as right now, I don't see anything on the schedule that anything. There's a schedule conflict in the morning. I'll let you guys know ahead of time. But
All right. Now I'll see you guys all tomorrow evening. I will be here tomorrow. No holiday, so.
okay, perfect. Yeah, thanks. I was about to ask you that. Yeah, so we will be back study group on Monday, 9 p.m. Central. Feel free to join there. He'll share the links as we come closer there. Appreciate you, Dan. Thanks, Donald. Yeah, everybody have a good one.